Welcome back to the JAMB Capital Weekly Market Update. It's March 22nd, and before we look at the Elliott wave counts on the S&P 500 E-mini futures, we're going to be looking at the SPY put and call expirations of March 23rd and March 27th. And then we will also be looking at the high yield corporate bond ETF. Both of these will provide us with some sort of quote-unquote context to the beginning of the week. First, past performance is no guarantee of future results. There is no guarantee of future performance. All investments involve risk, including risk of loss. This is purely education only. So let's look at our first S&P chart, or our first SPY. This looks like a in-the-money call. 1 hour chart. This expires, obviously, as you can tell, right up here. Possible, I'm not sure. Provides a little context of what we can see throughout the day. Makes sense following quite a bit of selling going off later last session. So here, let's look at an out-of-the-money call. These are 670 calls. And this looks like a little bit more defined. You know, we could possibly see up here, what is this? Probably 50 cents. Looks like a resistance level. There's another resistance level up here, close to $1.50. So it's quite possible it pops off. Now let's look at this expires the same day, Monday, March 23rd, 2026. Here, this looks a little bit more choppy. $3.66 invalidates this thesis, meaning that if it goes below that point, it's more than likely that we are going to see a move down, probably below $1. Meaning these puts. Let's look at an out of the money call. So out of the money put, excuse me. It kind of paints a little different picture, and this gives the fact that, quite frankly, the so-called relief of the ABC move, being this ABC and this being the relief, more than likely has been exhausted, and it's probably going to go, this number is probably going to become 4 cents, meaning they're expired worthless. So quite possible that what we see tomorrow is confusion, both buying and selling, making these, what we just looked at, useless. So let's look at in-the-money calls, the 640 calls that expire March 27th, 2026. Here, we've seen, quite frankly, just time decay is basically what it is. It's been garbage, unless you're shorting it. So I have $20.20. If we see a pop, if it goes above that, that means that, quite frankly, the week has been very, very good for the bulls, and quite frankly, we could see a possible larger term bottom support. Same thing here. It looks possible to see a bottom. Possible. These are out of the money calls expiring the 27th. See a move up here towards the $1.50. Who knows? And then we could see, maybe you could see, maybe it could double, and then it could just dump. Anything is possible. Now we're going to look at in the money puts, and this kind of brings the same thing. There's quite a bit of choppiness, meaning it's, unless you can read this, it doesn't work for the lay investor. And lastly, let's look at out-of-money puts. These expire the 27th. Same thing here, trend line, exhaustion. Quite frankly, it's probably going to go below 10 cents, would be my guess. Now, I believe that's the last slide. Let's look at, here is the high-yield corporate bond, being the HYG ETF. And this right here is the weekly chart. And all this is doing is providing a little broader context to what's going on. Quite frankly, this area right here, quite frankly, could be a large degree bottom. And when we see move back up here to 84, signaling that what we're seeing in the S&P, so to speak, is the start of a new cycle, which is quite possible. As you see, complex correction from 2022 highs up here, probably November 2021 highs, and it's just been a slop fest. This is all this is, just a sloppy mess. Obviously, it makes sense. You see a bunch of garbage, and then what you do is you start to see these clean patterns, like something like this right here. This is all garbage. There's nothing behind it. That's why I'm saying this right here can be a valid leader for bullish optimism. Let's look at this is the daily chart, and you can see this right here. I have this as a diagonal, so ABC diagonal. Back up here to 84, a little bit clearer on the labeling. Obviously, I'm not labeling that. Now let's look at the Elliott wave count. Here's the Elliott wave counts, and it's still the same. Voila. Still the same. There's nothing to really do. That line's going to get hit. This is going to get, invalidated. It already has been. So quite frankly, is this part of new growth? This can be a leading diagonal. This can be an ending diagonal, which means this can be new growth, or this can be old dead growth saying goodbye. And what we did right here was just confirm that this can't be a leading diagonal. If this breaks it, that's common sense. So this more than likely is or this can be, because this can be an A, B, C, this can possibly be a corrective wave. And we'll see another corrective wave based on prior price action, which has been, in my opinion, sloppy. So quite valid. This could be an A, B, C. This could be an A, this could be a B, this could be a C. Quite frankly, yes, quite possible. And this can be a corrective move, and we see upward progress. Or this right here, what I will show you next, is some possibilities. Here's one possibility. Markets move up past all-time highs. Excitement builds, but in the end, it's a false top. And we come back down to 64-ish. Go up from 7,100 to 6,400. Let's look at another one. Here's another one where I don't know if possible conflicting data pans out the next few months. Basically what happens is it's a consolidating B wave, and then we have a negative 5-wave sequence down 6150. This right here is worst case scenario, but reason being, price movement right here shows this can be an itchy trigger for limit orders. Basically saying people are leveraged too much, and these are continuous limit orders followed by buying the dip and then more limit orders until the markets, so to speak, settle themselves out. So this would be my preferred. Well, end on this. This is my preferred count of what the S&P. This is what I believe. My subjective bias. We have our ups and downs. I have this bottom of where we're at currently, us being near the low, whether I can't pinpoint exactly what it is, but right, we're starting another leg up. So that brings it to next support or next resistance would be 7,300. After that, 8,000. All right, well, thank you for listening.